Welcome to another episode of Blockrevision. Today I'm recording in another studio and that's why there's a little echo. But I will try to show you the most interesting elements of economic data and something that have had an impact recently on the markets, and we'll ponder over what the future directions of major indexes might be. So today, economic outlook, also crypto outlook, and some of the market outlook. So let's begin with the Economist's cover. This cover has been introduced on February of that year. The Economist is known by its forecasts, the accurate forecasts that are very often but indirectly attached to the covers of their weekly newspapers. This one, Ride of Roller Coaster, may stand to the observation that we have about 12 bars of the roller coaster ride. So that means that as a kind of the subconscious message may point to the possible answer that the ride may end in February of 2023. It's just a projection that I wouldn't stick really to, as it's kind of one of the predictions made by the publishers of this newspaper, but that's just a fun fact. But getting back to the most important parts of today's video is economy view, and that one gets us to where the markets are really, what data the markets are really interested in. Yesterday's very important event was Pelosi visiting Taiwan, as lots of markets were selling off regarding that action may escalate some military pressure. It really has silenced down today, and right now this event is getting quieter, and it shouldn't impact major indexes right now, so I wouldn't really stick to this flow. The more interesting is the speech of Fed's Daily that claimed that Federal Reserve's work of bringing down inflation is nowhere near, and that means that we may see another unusually large rate hike in September. So bank reserves at the Fed are dropping like a stone, and we can observe that this QT may spread even further. So it means that we still may not have reached the bottom. Interesting is point of view of Mr. Potzer that has said that the L-shaped recession is needed to conquer inflation, and by now the West were defending the US-China trade cooperation, and with this one been breaking up due to some economical tensions, this in deflationary pressure that been I would say emphasizing by higher demand right now may be pushed down due to having this trade problems being a little bit heightened and enlarged. So that means that this inflationary phenomena may linger a little bit longer. So looking at this chart, ISM manufacturing report is showing us that the odds of recession are really high, as those levels in ISM are aligning with the previous episodes where this recession, these ISMs were at the same levels. Getting further into the projections of Fed, right now the 75 point interest rate hike may not in September may not be of the chart, as especially these projections for the economy are not getting better in terms of tackling inflation. In terms of a cyclical component of US GDP rolling over, we are right now getting the peak right here, but it doesn't mean that we might not revert more heavily from here, that it would impact the more possibility of a recession to being brought over. So the markets are, as this conclusion says, are more and more vulnerable to hawkish surprises if inflation continues to struggle to reset and growth surprises. In terms of Europe, German retail sales is dropping to the levels unseen before, and that's something that pushes either it's Germany or UK into a very likely phase of recession. Even NISR think tank projected that average real disposable incomes may fall by an unprecedented 2.5% this year and remain 7% below the pre-COVID level through 2026. That's very gloomy forecast. In terms of market outlook, let's have a look. We have S&P 500 monthly seasonality that may point that after those doomy months ahead, we may revert tendency already after midterm elections that are planned in fourth quarter, and this fourth quarter might be more favoring stocks growth. S&P 500 metals mining index right now is at the lowest levels since the GFC, but doesn't mean literally that we may revert from here, as we still have a possible quantitative tightening on the table. That's a projection and observation where we may find that when the bear market happens and all of those gains nearly are erased. So that means that after this very strong period for stocks, we may see a very much of a slump from there. So there's something that really is spooking a lot of investors for now. However, in terms of S&P 500, we may get downwards, but we have a very important resistance yet to be, I would say, probably tested by major indexes in the weeks to come. That is about 4,300. Without that, we might have a revert tendency that will make us dropping below 4,000 again. So right now I would like to observe that we have on this rebound falling volume, so that could mean that right now we may get a little bit troublesome, but on the other hand, MACD is pointing on a weekly chart that we are entering a possible stronger rebound in the next few sessions. So that's a very interesting and decisive point we are right now at major indexes, especially in US. In terms of S&P 500 earnings per share projections, right now we can find that it has been lowered to that extent that right now is showing that the anxiety among investors may arise yet. Yeah, that's another seasonality chart that is showing us that the likelihood of having another good month right after September are yet to come, possibly. S&P 500 earnings above right now. These earnings are showing that above are just 73% of stocks, and that's the lowest point since quarter first of 2020. So that means we are really going through tough, hard times, I would say. In terms of non-commercial futures positions on mini, we can find that retailers are just expecting another leg lower, and as well in outflows from resources, we can find that this tendency is very strong, but right now is slowing, and we may find that the capital is a little bit reverting to those type of assets. Let's jump to futures positioning, and this one is most bearish since 2016 on E-mini, and however on the other hand, inside the transactions ratio right here is pointing that many of them are bullish. Right now, even with this projection has been lowered, analysts moderated the margin expectations, but record margins are still penciled in for 2023. So that means that we're still not expecting these earnings to collapse in the next quarters. We are finding that it will be very difficult to keep up with those projections, but market is still betting in favor of growth. In terms of crypto outlook, we already started the phase of regulations, and those delistings of major cryptocurrencies are pointing that this procedure is just started and may bring more concerns about what cryptocurrencies are really the securities and which are not. In terms of fear and greed index, we are right now pointing levels that are showing that a little bit of a strength is getting back, but still we are at the levels that haven't been seen since April, and this April's fear and greed shown a kind of a I would say projection that we still are not as anywhere above 50ish, and 50ish area is the one that is concerned as a bullish one. So we still in one of the territory that still may remain a little bit more pointing to a like a sigh of relief after this bear pressure, but not like another impulse of growth that may prompt us back to the levels above 40,000. And there might be a time to get an interest into what's going on in the cryptocurrency space. We have different cryptocurrency chains that are expanding their growth and they are developing despite this hard times. And BNB chain, it has introduced us a new tech roadmap for 2022 that expects that faster transactions, further decentralization, and even lighter applications may be brought to the customers. So that's also something that we may also have our eyes turned to, especially that during bear season there's usually the best occasions that we may get at a very low prices. In terms of other hand of the situation, we may point that right now a low bear market demand profile is pointing that we are still struggling with there's very low demand, so it's from retails especially. So that means that we still need to wait for this capital to inflow. But with this next coming event on Ethereum, and that will be this great merge and transition to proof of stake, that may have investors to get more interest in this type of assets once again. And this one, crypto, still popular despite crash. So we can find that the summer of 2022 is much more full of new investors rather than summer of 2020. So that's also kind of appealing. Right here we have capitulation to be done by September. That's the report that since June 7th other new generation mining rigs have likely been plugged in by both public and private mining companies. However, enough old generation machines are inefficient overleveraged and miners have shut off, that hash rate and difficulty have actually decreased in size. So that means we are expecting the miner capitulation to end in August or September. That's the one of the point of view, and it may be something that may attract again the price strength to return. So that's one of the things we need to also hang on for new investors on the mining market to come over. In terms of market movers, let's have a look. We had on Tuesday unemployment rate from New Zealand that was at 3.3%. It's a little bit higher than expected. RBA has fulfilled their expectations, and our interest rate decision has turned out at 1.85%, giving the room, leaving the room for further hike. On Wednesday, we have had already balance of trade from Germany, and it remained after April got a bit better than previous. And right now I would have my eyes turned on ISM non-manufacturing PMIs when, if lower than expected, I do find that market may have a further sell-off. So that's the one, and we are awaiting on Thursday's balance of trade gauge. So that is it. In terms of earnings, we have had yesterday AMD earnings that has a surprise to the upside, and as well as PayPal. So normally more and more companies are showing that they are fulfilling expectations, but still regarding of what we gone through previous months, those negative surprises are kind of getting more dominant and more dominant. So that's very interesting to watch what the next days will come. The ISM gauge is very important for today's sessions. Tomorrow we'll have Alibaba earnings and Block, and on Friday we have from the most important Berkshire and Canopy Growth from this lower market caps. Right, so that's it in today's episode. Thank you very much for watching. Tomorrow you will have a live stream with me, so there will be a little bit different type of recording. So see you tomorrow. Thank you very much.